Good morning, everyone. Welcome to the Macro Snapshot. We are Friday, August the 29th, 2025, recording this in the morning. Of course, it's the last day of the month, and before we have the new month, obviously the last trading day. And so, basically, in terms of the flows, it was interesting yesterday that we had a little bit of a bid in the long end, just a sort of a modest bid in the long end. But you can see already that's coming down, and there's some talk that there could be a duration. Just because the bonds have underperformed as stocks this month. So there could be a little sort of selling of stocks and buying of bonds, a duration, so month-end rebalancing and portfolio flows, 60-40 rebalancing, that kind of thing. So it'll be interesting today. Could be a bit of choppiness. Let's just see if that rebalancing is over and the US long end actually gets a little bit of a bid during today, or maybe yesterday that was actually it. In terms of the equities, we see that volatility here is very, very low. So the VIX trading at about a handle of about 14.5 or so. We see that the ES, essentially on the Nvidia earnings and whatnot, just sort of grinding a little bit higher. So technically, it's sort of trying to make sort of new all-time highs, but without a lot of energy. Maybe that's going to change next week as people get back to the trading desks and the sort of the year-end sort of period begins. But basically, volatility very low. You see here that the move index volatility of bonds also quite low. So not huge things expected as we go into the Labor Day weekend. What we do get today, though, we get some data. So we get the core PCE readings, and just to sort of look at the consensus here, you can see consensus is about 0.29 here, and a lot of this is already known because we already have, of course, the inputs from the PPI and the CPI. There's not really a huge divergence here, in the late twos, 0.28, 29, 27, that kind of thing. One thing which will be interesting is that in terms of the core number, and let me just bring that up, all the data we've got. So give me a second here, right, bringing that up. So just on the core PCE, just to keep that in mind here, we know that, from the PPI and CPI earlier indications and numbers, that a portfolio management is probably going to add about 10%, 10 basis points to the core PCE. So that shouldn't come as any kind of surprise here. But so what I think is interesting is apart from the month-over-month number, that's it here, 0.29, which of course will be rounded up to 0.3. Obviously, the market is hoping that might be a little lower. That would be nice, sort of 0.2, something like that. But if we look here at the year-over-year index, expected to tick up from 2.8 to 2.9. Again, the market more or less knows a lot of these inputs from, as I said before, from the components we've already seen in PPI and CPI. So to make this market moving would have to be something fairly unusual. What I think might get more of the market's attention is actually the personal spending and real personal spending, because what we're trying to figure out here is the labor market. We've been seeing the data seems to be relatively strong. Trump is trying to pump the economy, as much as possible. But on the other hand, there are some sort of indications that certain indicators here and there are sort of weakening, et cetera, et cetera. So what the market really wants to sort of focus on here is, are people still spending? Is it inflation adjusted? Are they still spending? And as you can see, the personal spending here, the consensus is to rise from 0.3 up to 0.5. And for the real personal spending, so inflation adjusted for inflation, the market is expecting 0.3 up from 0.1. So, that's sort of more of a confidence thing and an indication that the consumer is still doing well. Other information we get today, if we could call it that, we do get the Chicago PMIs coming out at 9:45. Keep in mind that for subscribers, that is released at 9:42. So if you see some sort of price action at 9:42, the private subscribers do get that 3 minutes before the peasants, the general public, so to speak. But again, that's the consensus is for sort of a weakening there in that purchasing managers index, and we get a final or second read for the University of Michigan sentiment. Again, I don't know how much that's going to be market moving. Second read, end of summer, et cetera, 10 o'clock. But just interesting to see if that confirms maybe some of the earlier data today. So that's mainly it. What we also got last night in Miami was a speech by Waller. And remember that Waller is a dissenter. He's a dove. And he was calling for rate cuts pretty early on. And based on what he regarded as a weakening, sort of signs of a weakening in the US employment situation. And of course, he's also angling to replace Powell at the Fed as the next chair. And he apparently is on the sort of the short list. So no surprise last night that he was relatively dovish. He basically said, which I thought was a fun headline, he said he was back on team transitory. He said he would definitely be voting for 25 basis points of September. The question would be, do they need more? He also said that that he believed that the data warranted more rate cuts over the next 3 to 6 months. So basically, Waller, no deviation from his personal script. He's still on the dovish side. And the speech, which I had a look at when he I had a look at the speech, and it's quite interesting as a read because it does, present a fairly cogent case for, sort of evidence that the U.S. economy and the labor market is weakening. And he also believes, as he outlined in the speech, that he regards the Fed as being in restrictive territory at this point, and he does believe that the Fed can definitely get down to what he regards as neutral, which implies cutting about 1 to 1.25, 1.5% to get down to neutral. So he believes that the Fed is restrictive at the moment. So definitely, camp sort of transitory, as he says, in terms of the inflation. Just in terms of where we're at the moment, just a quick recall: about 21 basis points here, priced out of 25 for September. So, about an 85% chance of a cut according to the market. And then if we go to the end of the year, which I like to look at, still hovering just above two cuts, so about 54, 55 basis points. So not a huge amount of change. If we look at the intraday for December pricing, we see that, it's just trading here between 54 and 55 basis points. So pretty static. As I say, if we get the core PCE, which comes in a markedly different way, so let's say a tenth or so more out of consensus, so +4, +5, obviously. And of course, on the dovish side, if it comes in at +2 or +1, 0.1, that of course would get the market's attention. And the thing to do would be to put that together with also the real spending sort of numbers as well at 8:30. That could create a little bit of market tension. But I think honestly, the other thing today, which the market's going to be looking at, is there's the first sort of court hearing for the sort of the case, let's say, of a Fed Governor Lisa Cook. That's happening, I believe, at 10 o'clock. That's going in front of I think one of the district courts in Washington, D.C. That's going to be interesting because that could decide, if this goes ahead, preliminary information, preliminary reading on that. And of course, that judge was appointed by Biden. She apparently is a Democrat. No doubt Trump, if he doesn't like the result of this hearing this morning, will be tweeting furiously on Truth Social. So the point is that there could be a little bit of sort of market fallout, around about, well, I don't want to say 10 o'clock, but as we get more information about that hearing. And of course, the idea here is that it looks as though Lisa Cook, the judge agrees that Lisa Cook, that the president does have the right to fire her for cause. That, of course, in theory, could lead to the market sort of imputing sort of a more dovish implication there is that there'll be a more dovish Fed going forward, which could be good for gold, bad for the dollar, potentially good for stocks in the short term, and probably would cause the curve to bull steepen as we see the front end yields probably coming off a little more and the back end yields maybe even backing up a little bit on the idea that the Fed would be less aggressive in combating inflation. On the other hand, of course, if the judge gives indication that this is a problematic situation, that it's not obvious that the president has the possibility or the right to fire her for cause, and it needs more sort of judgments and more sort of court appearances, well, of course, the market might take it the other way. We shall see. But as I say, it is Friday before Labor Day. Relatively low liquidity at the moment in the markets before we get back to work next week. So let's see how all of that goes. I think we also have Canadian GDP. Let me just double check that this morning. Canada. So yeah, so we do have the Canadian GDP here. This is going to be interesting because the Bank of Canada, let's have a look and see what's expected. So that's expected to be a little bit of a negative print here, so substantially downwards. The month-over-month number for the second quarter, the month-over-month number is expected to be up a little bit here. And it's going to be interesting just to see how that has an effect on the loonie and the pricing for Canada. Let's have a quick look at pricing for Canada. And you can see here that for the upcoming September meeting, the market's pricing in, it's pretty even here. The market's only at 50-50 here. So essentially 46% chance of one cut. Now, keep in mind that you see here the effective rate here is 2.75. So basically a lot less than the Fed. Keep in mind the Fed is 4.33. So up in Canada, a differential there of whatever that is, 130, 100, about 150 basis points. So the Bank of Canada has already been much more aggressive in cutting, and we don't really see the full next cut, the fully priced in until January, February, March of next year. So that will be, potentially interesting to see what happens just with the updated reading here of Canada GDP for the second quarter. It's slightly old data, but for sure that's part of the jigsaw puzzle for the Bank of Canada. So keep an eye on the USD as a CAD for that one there. Okay, guys, I'll leave it there. So as I say, let's see what happens with the core PCE is expected to come in at 0.29, rounded up to zero point 0.3. As I say, personally, I'll be watching more the spending and the income numbers. And then at 10 o'clock, let's see what the judge has to say in the preliminary hearing about the Lisa Cook case, which potentially has much bigger implications going forward for Fed independence in general, bigger picture, and also the sort of the trust the global sort of financial system has in the independence of the Federal Reserve System. That's a much bigger picture, but this is all part of the sort of the building blocks which are going to go into that trust. So let's keep an eye on the US dollar as well. Thanks very much. Have a great weekend, and possibly a video on Monday, possibly not. Markets are closed. We'll see if there's anything worth chatting about. Thanks very much. Have a great weekend. Goodbye.